Hey guys, hope you and your families are well. Weekly IBD video sponsored by MarketSmith. Discounted trial available in the comments below if you are interested. Going to be taking you through some stocks in the IBD 50 list I think are interesting. They're going to center around 4 key areas. That is going to be semiconductors, solar, biotechs, and also oil and gas. So I'm going to show you the relevant sector ETFs and or theme ETFs for those. So hearing from the FOMC on the 1st of Feb, I think that is going to be a significant catalyst. Very interested in the market reaction, whether we see continued positive action or if we see a lot of rolling over, volatility spiking, some bases that are looking constructive breaking down. So it's going to be an interesting week. So these are some of the stronger areas of the market. So semiconductors, similar pattern to what I'm seeing on the S&P 500 in terms of a head and shoulders bottoming type pattern currently. So it's going to be very interesting, the reaction to the FOMC. So you have the left shoulder here, you have the head here, you have the right shoulder here, you've got the RS line for the semis now starting to turn up nicely as well. You can see three or four very strong weeks coming through with a bit of volume as well. So it's going to be interesting whether we continue to see a series of higher highs, higher lows, higher highs, higher lows now coming through. So yeah, very interesting. So let's go through a couple of the semi stocks on the IBD 50 list. And what I think is interesting here, this is LSCC, so very good earnings estimates for the next couple of years, forward guidance up, consistently high earnings, sales, RS lines look very strong. You can see that a few higher quality growth funds have been busy adding to positions, initiating positions, albeit one marginally decreasing their position. But what I like here is the causality point. So this is a decent sized base being built, and you could look at this as a big old cup and handle type pattern forming. Now it needs a little bit of work. I'm very specific in terms of what I need to see for a setup. If you want, there's a model book with thousands and thousands of stock. I got a 7-day free trial if you want to go and look at that, but you'll see what it is I'm waiting for. I call it trigger bars, setting up on one or more key moving averages, volume really drying up, and that trigger bar is the final piece of the jigsaw puzzle to me in terms of when I then see an optimal chart pattern forming. But LSCC looks strong. Now one thing to do is obviously you want to try and identify strong areas of the market, but then also strong stocks within said areas. So the blue line is the RS line versus the market, but you see this green line here, this is the relative strength line versus the stock's own industry group. So this is comparing the stock to its quote unquote brother and sister stock. So nice to see that, and the stock has a history of being able to trend well as well. So that one there is one that I'm looking to tighten up and set up. This is Broadcom here, so similar-ish in terms of a potential head and shoulders bottoming type pattern, and fairly clear left shoulder and head, but the right shoulder has actually been pretty strong, so you could look at that as a sign of strength. But Broadcom, big old semi stock, around about $246 billion market cap, needs a little bit of work. I would like this one to set up on the 10-week, which is the red line there. That's the 50 SMA on the daily chart. But Broadcom has a history of being able to set up some decent bases and trend and trend fairly well as well. So that's one I'm looking at, but we'll likely target one that is kind of a little bit lesser known instead of kind of a mega cap, large cap like a Broadcom. This one here, now this one is going into small cap territory, more mid cap territory. This is ALGM, so consistent with the earnings, with the sales estimates look good. Do you have a higher quality growth fund decreasing part of their position, the other one staying pretty flat? Stock has recently IPO'd, so this is potentially the first kind of viable base in terms of a decent sized base forming here. Go down to the daily chart. It was actually tight. It was actually tightening up here on the daily chart for a little cup and handle with a low pivot forming in there. So this one short term extended again, just needs to tighten up. But these are stocks within themes, areas of the market that I'm seeing strength in, but again, very specific in terms of what I'm looking for an entry. This is on, so very strong in terms of the RS lines versus the market versus the stocks and industry group, and potentially building a decent sized base in here. So again, it's one that had a very good week last week, just needs to tighten up, set up on one or more key moving averages, good earnings, good sales coming through. MCPH is another one. So building a potential cup and handle type pattern here. It's a little bit more choppy, this one, but if it can set up, it's got the 10-week there. If this can set up around the 10-week, that there could be interesting. Good earnings, good sales coming through, very consistent. So yeah, we'll see. But semiconductors, an area of focus. There's some that are more so on the market growth 250 list, and otherwhere that are smaller and mid caps they're showing a lot of relative strength. Could be fairly interested. Let's go into solar stocks. So this is an area of the market I'm actually more excited about this than I am semi. So looking at TAN here, this is the solar ETF that I look at. So you potentially got this very large flag type pattern forming in here. Okay, building a decent flag, RS lines on a long-term and intermediate-term trend, I would say, trending up off of the COVID lows. You see this red line here, this is the 10-week. It encapsulated pretty much the entire move here. So what I like to look for is areas of the market that have a history of being able to trend well, which just makes the trade management side of things easier. So if the sector ETF can trend like this, then it is likely that stocks that make up the sector ETF are also trending fairly well. Not all of them, but several of them may be able to. So that's where you go back and you look for those cleaner moves. So potentially a very large flag forming in here, and then you've also got this nice VCP action. You have some nice shakeout demand tails at the lows, but see how this is starting to build higher lows, looking very constructive, setting up around multiple key moving averages. Volume is starting to dry up here as well. So again, if we get a positive market reaction to the FOMC, and we get the likes of TAM breaking out here, displaying what I call bullish synchronicity, widespread candlestick, good volume coming through, confirming the breakout. If the SPYs, if the SMH, the semi ETF continues powering up from their head and shoulders bottoming type patterns, if stocks are acting better, volatility is down, it's sub 19, so in what I call the money bucket volatility regime. If the dollar continues making a series of low lows and low highs, it's an interesting market environment. So with TAN here setting up, this is then getting my attention. So then when I go and look at some of the solar stocks on the IBD 50 list, one that is catching my attention the most at the minute is actually SHLS. Now what I like is the chart pattern setting up. I'll show you this one on the daily chart in a second, but you have two higher quality growth funds who have initiated a position in Q4 of 2022. Now they're only doing that for one reason. Take a look at the estimates and the forward guidance. Really good to see. Earnings share growth rate on a 3 to 5 year look back is 49%. Sales look pretty consistent, and then here, if you take a look at the earnings coming through for Q3 of 2022, plus 43%, and the comps on a year-over-year basis are fairly easy as well. When you look back over the prior 4 quarters, comps are pretty easy as well. So that's interesting. We'll talk about comps year-over-year when we'll go on to some of the oil and gas stocks. They're going to be running into difficult year-over-year comps because of some of the gains that they saw. But this is interesting. RS rating of 98, so it's nice and strong. Let's see. So what I like here is on the daily chart, 1 contraction, 2 contraction, 3 contraction, now starting to tighten up around the 1021 and the and the 50 SMA. Volumes beginning to stay below the average. You've got after tax margins going from 1% to 13 to 16 to 18. So you have accelerating margins, accelerating earnings. Generally speaking, sales are accelerating as well. If this can put in what I call a trigger bar in the mid to high 20s underneath $30, this could look very interesting indeed. So that there is a solar stock that I'm paying a very close attention to. Solar Edge is another one, but fair show. Solar Edge has got a little bit of insider selling if you go and look into that. But RS Line is good versus a stock zone entry group over the last couple of months or so. It's a decent sized base building in here. So yeah, it's one that is on the radar as well. But SHLS in terms of the solar stocks on the IBD 50 list is currently of more interest. I like the higher quality funds going in. So another area of the market is biotech. So if we bring up IBB, this is the main ETF I look at for biotech. So you can see it's a clear phase 4 decline here, right? But what I'm looking at now is there's a lot of bottoming patterns forming in the market, whether it be the head and shoulders in the SPYs, in the SMH, the large weekly base on TAN as well. And then when we take a look at the IBB chart, well, it's got a bit of VCP action, hasn't it? So it's got 1 contraction down here, 2 contractions here, 3 contractions here. So it's starting to build high lows. And then the high highs are now starting to come in as well. So what's going to be interesting is whether this can take out the last week's highs. Volume has been drying up constructively as well. It was pretty much an inside week last week. Again, I think much short term is going to depend on the market reaction to the FOMC. But if this starts coming out here, biotechs could look like a very interesting area of the market. And there's a lot of biotech stocks of late which have been setting up, and you've seen some in the IBD 50 list as well. So the first one from the IBD 50 list is RVNC, high quality growth fund, establishing in Q3, adding in Q4. Weekly chart, it looks super strong, doesn't it? RS rating of 99. Short term, clearly extended here. Many biotechs do not have earnings. Some have sales, others don't, but the vast majority have no earnings and no sales. But on a short-term basis, this is clearly extended, but it's been able to power up from about $17 to nearly $35. So potential high type flag forming here. So you see this pink line. I would like at a minimum the share price to be sitting on the pink line, which is the 10 EMA, and then that trigger bar come through. So a high type flag, something like this, and the pink line here, the 10 EMA, just catches up. So then you get this nice flag type pattern forming. That's what I'm looking for. Up here, I'm not going anywhere near it. Short term, very extended, but strong biotech stock on the on the IBD 50 list. One that I'm more interested in shorter term is Z Lab. Now, this is a Chinese related stock. If I bring up KWeb in a second, it's been very strong. Hard to see down here, but this is setting up pretty constructively, going from $28 to $49, around about a 75% increase. And then you got some nice volume coming through here. You got a nice bullish synchronicity bar coming through here. Then look how the volume has just been drying up over the last week and a half, and look at the tightness coming through. Appreciate this, hard to see tightness coming through on the 10 EMA. This one's looking very interesting indeed. Then when I go and take a look at KWeb, and let's load this up onto the oh, you can't see it very clearly on the weekly chart. If we go and take a look here, what you've got with KWeb is it's trying to come out of a very large potential phase 1 base. So it just keeps building this flag after flag within the context of this base. This first one here is more so a cup and handle. So here's the cup, here's the handle. Now again, trying to build another flag, a little VCP Davis box in here, but powering up, volume is low. I'm not seeing much distribution here. So I think China, KWeb is interesting, going from this potential phase 4 into phase 1. Let's see if this stage 2 uptrend can start unfolding. Again, looking for higher highs, higher lows, little evidence of distribution and evidence that demand's coming in. So Chinese related stocks look very interesting. There aren't many, if any, on the IBD 50 list at the minute, but there's some very strong Chinese stocks. That is a very good area of focus at the minute. Going on to another one is VRTX. So let's load this one up. So yeah, we'll stay on the weekly chart for this one. You've got three high quality growth funds who have been pretty busy in the last couple of quarters. Now the stock has been pretty choppy in this area, but it has a prior history of being able to tighten and run okay. These are nice moves to see. So it's starting to form potentially a cup and handle type pattern. It's not my favorite biotech stock. It's one on the IBD 50 list. I'll be watching it, but I think there's some better opportunities out there. But I will be watching it in any event. Potential cup and handle. Maybe it sets up on the 1021 EMA, but biotech's look an interesting area of the market right now. And then let's go on to let's finish off with some oil and gas stocks. So oil and gas stocks, as we know, for a while, well, for a long time actually, have been in the context of a very nice uptrend. So they just continue trending up. RS lines overall look pretty good. And then if I go down, well, let's down the weekly chart actually. So if we go to the weekly chart, potential cup and handle forming for XLE, which is the main one that I look at. So potential cup and handle type pattern. Maybe it's starting to build out the handle. Volume is drying up, and then you have some of the big boys. You have COP, you have XOM being ExxonMobil, you have CVX being Chevron as well, and you have some high quality growth funds. You can take a look here. You got JP Morgan large cap growth, you got Fidelity in there, have been adding in the last 3 quarters, and then some of these stocks are building some large weekly bases, tightening up a lot of them around their 10-week moving average, which is the 50 SMA. Now, what I think is interesting in terms of a year-over-year basis, you can see it's comping. It's going to be fairly hard year-over-year comps relative to, say, some of the Chinese names, which actually have some easy year-over-year comps because of the lockdowns and now the reopening. So I still think Chinese related stocks look very interesting. So these oil and gas stocks, seeing some large weekly bases setting up. Some have been getting out of late, such as a PAR. This was a flag on the daily. See how it's building higher lows here, then it starts tightening up, 10 EMA, 21 EMA, so it's building this flag type pattern, there's flagpole, then see how it comes down here, starts putting in these higher lows. So you're seeing some of the oil and gas stocks getting out, so it's an area of focus, likes of a part. This is very extended up here, it needs to pull back down, shape up. There's areas I would rather target ahead of oil and gas stocks. Personally, I find them difficult to manage, but a PBF here, you can see, you got some VCP action, 1 contraction, 2 contraction, 3 contraction, higher lows coming in, starting to drift sideways, need some more work in here for a potential Davis box. But again, you have high quality growth funds busy in the last couple of quarters. They're only doing that for one reason, but you're going to start getting into some tough year-over-year comps, especially as we start to get into the latter quarters of this year. You can see that you've got in terms of upcoming quarters, you've got 128%, 113%, 940%, 999%. That's difficult year-over-year comps to be contending with, but we'll see. The market knows far more than I possibly know. PSX. Let's go back onto the weekly chart. So again, it's a fairly choppy one. Again, these are ones in the IBD 50 list, and I think oil and gas there are some better options out there if you start drilling down and looking at some of the lesser known ones, and especially dialing into the more stronger areas of the market as well in terms of field services still look strong. So Fidelity adding to their position, nearly doubling their position in the most recently reported quarter. Again, they're not doing that. They're not doing that for fun. They're doing that for a reason. So a little bit more work around the 10-week, the red line, that there could look very interesting. And then the final one here, this is a better looking base. You got 3 higher quality growth funds who have been busy in the most recently reported quarter. RS lines look good, and then you can see, let's see how it's building these higher lows. So it's got a bit of VCP look to it. Needs a little bit of work on this one, but yeah, it's interesting. Oil and gas stocks are interesting. They're just not going away as of yet. Personally, I'd rather focus elsewhere. I think there's better. I think there's kind of not necessarily better, but I think there's easier areas of the market to be trading instead of commodity stocks, especially oil and gas. They're difficult, but you can see some of the year-over-year comps. It may be running into, maybe it can shrug that off, and the earnings are great, but the market often views things of are things getting better, or are things getting worse. So we will see. But in terms of oil and gas stock, earnings share growth rate 48%, ROE 32%, hitting on many cylinders, and just a couple others that are oil and gas as well. Schlumberger, if this one can tighten up, very good estimates and full guidance coming through. A Halliburton as well, still potentially kind of carving out cup and handle. Fidelity adding in the most recently reported quarter, estimates look good. So oil and gas, they're not going away as of yet. But some areas that I've just been highlighting that I'm very focused on is China, it's biotechs, potentially some of the solar stocks if they can set up. You do have some oil and gas stocks there, and the semiconductor stocks as well. Maybe even some precious metal miners too. So we will see. But thank you very much for watching, guys, and I will see you in next week's video.